Good afternoon, all.
Good afternoon.
Yeah. You are able to see the screen and you are able to hear me, right?
Yes.
Yes.
Thanks for the confirmation. And yesterday we have completed the enterprise structure configuration. So we have created a company code, credit control area, right? Business area, consolidation business area, right? A financial management area. And after that, what we did, we have made a relation between company to company code, correct? So those relations we have completed. So that is nothing but first more important thing, that is any module, if you go for FI, if you go for CO, if you go for MM, if you go for SD, so this is the basic configuration what we used to do and what we have to do. Clear? So next one, the most important thing is company code global parameters. Put a heading as a company code global parameters. Company code global parameters. Okay, enterprise structure setting is completed with this. Company code global parameters. Next stop, put a heading as a company code global parameters. So I have prepared an Excel for you and I'll share that also with you people. So write down these, able to see the right company code global parameters. So write down these 10 steps. Okay, write down company code global parameters. Once you're done, put in the notes. It's very important because one interview point of view question, what are the configuration you will do in company code global parameters? Just write on this. Just write it down. Once you're done, let me know. Chart of accounts, fiscal year variant, posting period variant, currency settings, field status variant, tolerance groups, document types, posting keys, exchange rate deviation. Don't write this. I'll share this Excel also, but it should be there in your notes so that what are the things we have completed. We'll come to know. Once you're done, please kindly update.
I'm done.
Okay, great. Okay, most of the interview questions they're going to ask you in this areas only, initial. Okay. So, okay. So let me open. First one is chart of accounts. First one is chart of accounts. I'll give you the definition. What is chart of accounts? Write down. Write down. Chart of account is a. Write down. Chart of account is a. Chart of account is a. Library of GL masters. Chart of account is a library of GL masters. Library of GL masters. Chart of account is a library of GL masters. Based on this, we can record. Based on this, we can record. We can record all day-to-day transactions. We can record all day-to-day transactions of the organization. And also we can generate. And also we can generate all financial reports. All financial reports related to chart of accounts. Related to chart of accounts. Related to chart of accounts. Okay. Okay. You know that, right? What do you mean by general GL accounts? GL account is nothing but individual accounts. GL account is nothing but individual accounts, right? So each account has to be created in SAP system. Means sometimes this is an end user activity, actually, GL accounts, creation of GL accounts. Okay, but creation of chart of account is a consultant activity. Clear? So each ledger account need to be maintained in those lists need to be maintained in one head we call it as an chart of accounts. Chart of accounts is nothing but list of ledger accounts. What do you mean by chart of accounts? Chart of accounts are nothing but list of ledger accounts where all the ledger accounts will be maintained. Where all the ledger accounts will be maintained, which are used to record day-to-day transactions of the business or organization. Clear? Okay, in this chart of accounts, we have the most important. In this chart of accounts, we have account group, account groups. Okay, under account groups, we will have GL masters. GL master is nothing but individual accounts. GL master. Okay, just write down this picture. Chart of accounts. Under chart of accounts, we have account groups. Under account groups, we have a GL master or master data. Individual accounts. Individual accounts. Chart of accounts, account groups, and GL accounts. That is the structure. Okay. Right? How the hierarchy? First chart of accounts. Under that account groups. Under account groups, we have GL masters. Okay. And we can maintain three types of chart of accounts. How many types of chart of accounts we have? We can have three types of chart of accounts. One is operational chart of accounts. Very important. This is operational chart of accounts. Second one, group chart of accounts. Group chart of accounts. Next one, country specific chart of accounts. Country specific chart of accounts. There are three types of chart of accounts. Okay. Operational chart of accounts, group chart of accounts, and country specific chart of accounts. Write down this. Okay. Operational chart of accounts is mandatory, compulsory, required. Okay. And these two are optional. Without creating also, we can do our transactions. Optional. operational, okay. Operational chart of accounts is a mandatory chart of accounts. Every company or company code, it's required. And group chart of accounts and country specific chart of accounts, it depends. Okay. We may create or we may not create. Okay. Till here, any questions?
No.
Till here, any, right? So I'll explain what do you mean by exactly operational chart of account and group chart of accounts and country specific chart of accounts. Okay. We have two methods we can maintain this chart of accounts. Okay. 1:n methodology. 1:n methodology. 1:n methodology. Okay. What do you mean by 1:n methodology in the sense? For example, I'm having my chart of accounts. I have given it as an, we can give chart of accounts 4 digits. That could be alphabets, that could be numeric, that could be alphanumeric. So whatever chart of accounts we are talking here, okay, that chart of account code, we can have maximum 4 digits. Maximum, how many digits? 4 digits. So that could be a numeric, that could be a alpha, that could be alphanumeric. Okay, so here what I'm taking, I'm doing here as an LOCA. LOCA, nothing but Lahari Operational Chart of Accounts. Okay, what I'm taking here, naming convention, Lahari Operational Chart of Accounts. So maximum how many character we can have? Maximum 4 character. That could be, again, I am reiterating, that could be a complete numeric 1, 2, 3, 4, or it could be have alpha ABCD or alpha numeric ABCD 1, 2, ABC AB 1, 2, like that. Okay, LOCA. So we can have two methods. How can we maintain a chart of accounts in the sense? Two methodologies we can use. One is 1:n methodology. Okay, what do you mean by 1:n methodology? So one operational chart of accounts can be linked to all the member company codes. Like what are the company codes we have? LI01. Next one, LI02. And next one, LU01. Right? So I'm just removing this so that it would be. Okay, I am creating one chart of account, which name is LOCA. Name is LOCA. Okay, and these chart of accounts can be linked to, integrated to all the member company codes. Okay, that is LI01, LI02, and LU01. So here, what is the criteria? In the sense, it's very, very important. Again, I'm saying, if you won't understand, I'll explain any number of times. No issues in that. Let me. Okay, LOCA, that is nothing but my operational chart of account. LI01, LI02, LU01. What is this method? 1:n. One chart of account to any number of company codes. Multiple company codes. Okay. One is n methodology means one. Okay. Second method is 1:1 method. 1:1. One chart of account is to one company code only. Okay. For example, we have 3 chart of accounts. Okay. We have 3 chart of accounts. LOC1, LOC2, okay, and LU01. Sorry, LOC3. LOC3. 3 chart of accounts and 3 company codes. LI01, LI02, and LU01. Okay, and LOCA. LOCA. Okay, so here I can just try to draw this picture. So each chart of account is having, okay, each chart of account is having individual company code, is linked to individual company code. And in the same way, okay, and we have credit control areas, LICA and LUCA. Just write down this. I'll explain. When it is eligible to come under 1:n methodology and 1:1 methodology. Once you're done, let me know.
Done.
Okay. Write down below, write down a note, NOT note. Below, write down a note, NOT note. Operational chart of account. Operational chart of accounts. And country specific chart of accounts. Operational chart of accounts or and country specific chart of accounts will be assigned to will be assigned to will be assigned to company code will be assigned to company code will be assigned to company code, whereas group chart of accounts will be assigned to group chart of accounts will be assigned to operational chart of accounts. Operational chart of accounts. Okay, we'll link it to group chart of accounts will be linked to. Okay. So this is my group chart of account. Okay. This is my group chart of accounts. Okay. This is LOC is a group chart of account. Just write it down. Okay. So here, what is the criteria? So 99.9% companies will go with 1:n methodology. 1:n methodology. Clear? 1:n methodology. Why 1:1 methodology? In the sense, let me give the note.
Naveen, I have a question.
Please.
Yeah, so Naveen, for 1:1, 1:n methodology,
Mhm.
so like all the company codes should be in same line of business activity, right? Then we can have the same operational
What
chart
do you
of
mean by
account.
same line of business activity?
Like for example, like if it's a car manufacturing, so like all the company codes should be in car manufacturing only.
No, it's not the same. See here, what are comes under what company codes? For example, as I said that my company is Lahari. Under that, I have three different company codes. Okay, one is LI01, LI02, and LU01. And LI01 and LI01 is into cement manufacturing, and LI02 and LU01 are into steel manufacturing. Clear? But when they are
Okay.
eligible, these company codes are when eligible to LOCA means common chart of account, in the sense when the company code follows same fiscal year, same same fiscal year, in the sense all the three company codes should follow. Okay, same fiscal year means my accounting year is either April to March. Okay, or Jan to December.
Okay.
Okay. If my company code, all the member company codes are following same fiscal year, okay, then those member company codes are eligible to use common chart of accounts. Okay. And what is other thing? If this company code, these two are using April to March and LU01 is using Jan to December. Okay, then can I use the same chart of accounts for three member company codes?
No.
Correct. So this is not eligible. So I need to maintain a separate chart of account for this particular LU01 company code, correct? So here two
Yeah.
company codes are using same chart of account because they are following April to March. First one. Okay, whatever member company codes are there, they should be follow same fiscal year. Same fiscal year. First thumb rule. If you want, you can write it down.
Okay.
Okay. 1:n methodology. Okay. First rule, first thumb rule note. First thumb rule. All the member company codes, all the member company codes are using same fiscal year, same fiscal year, then those company codes, are eligible to use okay, they are eligible to use same operational chart of accounts. Okay, same operational chart of accounts. Next one. I think I have mentioned here also. Same thing I have mentioned here. Okay. Next. What is the advantage if you are using same operational chart of accounts? What is the advantage if you are using same operational chart of accounts? In the sense, intercompany transactions are possible. Okay. If I am using different operational chart of accounts, okay, 1:n methodology, then the intercompany transactions are not possible. Clear? Intercompany transactions in the sense the transactions between LI01 to LI02, LI02 to LU01, LU01 to LI01. Okay. Understood. So why we need to do, even though if it is separate operational chart of accounts, why can't we do intercompany transactions in the sense, if we are using same operational chart of accounts, whatever transaction taken place between one company code to another company code, all the member company codes, then we need not to pay any taxes on receipt and payment or on purchase or sales. But if your operational chart of accounts are different, if your operational chart of accounts are different from each company code, then whatever transactions we are doing between one company code to another company, then that is considered as a third party transactions, not intercompany or cross company code transactions. Then we have to pay taxes on each transaction as per their country norms. Understood, everyone?
Yes.
Clear? So write down first one, operational chart of accounts. We will have a definition. The next we will discuss again. First one, operational chart of account. Operational chart of accounts. Operational chart. It is a mandatory chart of accounts. It is a mandatory chart of accounts for every company code. It is a mandatory chart of account for every company code. It is a mandatory chart of account for every company code. Based on this, based on this, based on this, based on this, we can record all transactions. We can record all transactions. We can record all transactions and generate reports. We can generate reports for internal and external purpose. You can generate reports for internal and external purpose. Okay. Second one, group chart of accounts. Group chart of accounts. Group chart of accounts. Write down. Group chart of accounts is an optional chart of accounts. Group chart of account is an optional chart of accounts in SAP. In SAP. Based on this, we can generate. Based on this, we can generate. We can generate all consolidation reports. We can generate all consolidation reports. Okay. All consolidation reports where we are using different operational chart of accounts. Different operational chart of accounts. Clear, everyone? So here we are using different operational chart of accounts. So to consolidate that, we need to have a group chart of accounts. Correct? Each company code is having a different operational chart of account, you can see here. And so if we are getting, then we can get individual reports only, not consolidated. Okay, next one, right? Country specific chart of accounts. 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 Country specific chart of account also. Country specific chart of account also is also optional chart of accounts. Optional chart of account in SAP. Optional chart of account in SAP. Okay, optional chart of account in SAP. Based on this, we can generate. Based on this, we can generate. Based on this, we can generate statutory and tax reports. Tax reports country wise. Country wise. Tax reports country wise. Statutory reports and tax reports country wise. Understood this? Any questions here? Understood?
So Navin, for GST and all those, this country specific chart of
Yes.
accounts will be needed.
No, exactly. Because, but what is my corporate? See, here I'm using the company called Lahari. Correct? Lahari company is Indian company, for example. But it is doing transaction between 3 different company codes. One is LI01, okay, which is Hyderabad based. And one more LI02, because you are not there, that's the reason I'm repeating. LI02, okay, then it is Mumbai based. And I have one more LU01. The company code, this is LU01. Okay, this is US based company code. But where is my corporate office? Where is my corporate company? Where is my company?
India, Hyderabad.
India, correct? India, right? So here for
Yes.
GST, see, this is, I want to group by consolidated reporting in the sense, I want as per Lahari group of companies report, whether, see, if you take Reliance comes under which company? Comes under Indian company or any other country's company?
India.
India. Same thing if you take Wipro. Wipro is Indian company. Wipro is Indian company. Okay. And it is spread into different countries, US, UK, right? Europe, right? Different countries. So here, my corporate office is in India. Correct? Where is my corporate office? Wipro
India.
So as I said that, Wipro India, Wipro US, Wipro UK, Wipro Euro. But where is my corporate office?
India.
India. So here what I'll do is Wipro, as it is an Indian based company. So first of all, I will have 2 different reportings. Okay. One is local GAAP reporting. Okay. Next one, IFRS reporting. Okay. And next one, we have US GAAP reporting. Clear? So here what I'll do, whatever even though my company codes are in different countries, okay, but where is my corporate office? If I want to consolidate whether Wipro is running in profit or loss, so what I would like to do, if I want to consolidate, then everything I want to do in Indian only, nothing but local gap. That is nothing but Indian gap reporting. Okay. And additionally, what are the other reportings I can do? So if I want to see how UK companies performing, then I can do IFRS, international, that we will discuss in future, international financial reporting standards. So as per UK, okay, even this is performed in two reports we can generate. One is local gap, that is nothing but your corporate office gap reporting, where it is situated, and after that IFRS reporting, and after that US gap reporting.
Okay.
Understood, right? So here, if I initially, if I am doing, this is Wipro 1, Wipro 2, Wipro 3. For example, Wipro 1 is in India, Wipro 2 is in US, Wipro 3 is in, for example, UK, right? Even though there are three different countries, but first of all, I want to consolidate report, right? So for that particular purpose, what I'll do, I'll create one common chart of account for local gap reporting. Fine. So everything, it will be converted, okay, into INR, whatever transactions you will do, okay, that UK, whatever transactions you will do with the UK company code or US company code, everything, it will be converted into INR. Clear?
Yes.
Yeah. So here, my company code, initial reporting, everything, even though this particular company code, company is in US, LU01 is in US, but still, what is the initially for consolidation purpose? What is the physical year we are going to maintain? Same April to March only for, okay. And next one, currency, even though it is a USD, we follow what you call April to March only. But when it comes to reporting, US GAAP reporting, why US GAAP reporting? We need to submit any business who is doing a foreign trade, imports and exports, clear? So they need to maintain their local reporting plus IFRS reporting, it's a mandatory. Okay, and they need to maintain US, even though I'm not doing a transaction with US, but we need to maintain, it's a mandatory to maintain US GAAP reporting. Why US GAAP reporting? Because our currencies, the foreign currency valuations normally performed in international market through US currency only. Everything, gold and foreign exchange will be compared. That is a standard currency. US currency is a standard currency, right? Every currency, all the countries' currency will be revaluated with US currency. So that is the reason, even though if I don't have only two company codes. One is LI01 and LI02, clear? But I am doing, both are in India, but I am doing buying and selling from Singapore or Australia, from Canada, right? Then I need to submit my reports to UNO, right? Business, international business. Clear? Then at that particular point of time, what are the reportings I need to prepare? I need to prepare, one is local gap for Indian rules and regulations. And what is the other report I need to prepare? Mandatory. What are the other legal reports we need to maintain? US gap reporting.
Yes.
Clear? Without US gap reporting, we can't do any international business. So for example, if I want to do the exchange, if I want to do a transaction with Singapore or Australia or Canada, right? So if I'm doing, okay, I have two reports. One is local gap report and I'm having a US gap reporting. Okay, I want some credit goods. I want to buy credit from Canada. Okay, if I submit my local gap reporting, they want Canada government, Canadian trader or seller will not accept. If I submit US gap reporting, even though the Canadian seller will not accept, then what we have to do, we need to prepare IFRS gap reporting, IFRS reporting. IFRS, it is an international. US is restricted to US. Local gap reporting is related to local only, but IFRS, Indian financial reporting standards.
Yes.
Understood. So it will accept across the globe, these report. So as per their country wise, they will consolidate it.
Yes.
Fine. So then we need to submit our Canadian or whoever Australia, if we want to buy, then they will see our financial statements as per this IFRS reports. There are number of standards are there, 32 standards.
Okay.
Okay.
So That means even my company is not set up in abroad. Even I am doing a export or importing of goods.
Correct.
So I have to prepare the reports like on based on of
Exactly.
if I'm doing with US, so US is limited to US GAAP only. Apart from US, any other company, I have to maintain IFRS as well as my local
Exactly.
GAAP. I have
Correct.
that's a legal requirement.
Correct.
Okay.
Fine.
Got it.
Then only you are eligible to get a credit limits or something else.
Okay.
Okay.
Right.
So next. Understood, right? Group chart of accounts, country specific. Okay. And
Yes.
most important thing is, okay, we have account groups actually. Below chart of accounts, we have account groups. What do you mean by an account groups? I'll tell you. This is again comes to grouping. You heard about, right? Group in financial accounting, our accounting cycle. I'm deviating now from SAP to our manual accounting. Okay. Anyone know what do you mean by grouping and marshalling?
Marshalling means what I say, lining up the accounts in a proper manner,
Order,
and
correct? But what do you mean by grouping? See here, for example,
grouping means same type of GL accounts we are grouping into one
same nature.
group. Yeah.
Yeah. See, normally, for example, someone has given you a piece of paper. On a piece of paper, he has prepared some sheet, balance sheet. On that, they have mentioned no heading, nothing. So they have mentioned it as an assets and liabilities. And he kept it as on the liability side only capital, not share capital. Only he kept it as in capital and he has given some amounts. And at the end, he has totaled it. Okay. Right. Everyone are from commerce accounting background only here, right? Yes or no?
Yes.
Yeah.
For me,
So,
it's yes.
yeah. Okay. So here, a layman, he doesn't know anything about accounts, and he has given that piece of paper and asking you what kind of balance sheet is this? Is this a company balance sheet or non-company balance sheet? Non-company in the sense it could be a bank, it could be a sole proprietor balance sheet, or it could be anything. So how can we make out? And he has mentioned no share capital, no heading as an balance sheet of so and so measures and company, nothing like that. Only a piece of paper is there. In that, he has mentioned on the liability side capital and other stuff, and on the asset side other stuff. So how he's asking us, he know that we are from accounting background, okay, and we are working and we are having hands-on experience. So how can we make out the given balance sheet is a company's balance sheet or normal in the sense non-company's balance sheet? Anyone? Yeah.
If the balance sheet is prepared as per Companies Act, then
No,
it should be in
what is
proper.
it? What is that? What is that? Companies Act. What Companies Act says?
As per Schedule 6, 2013
No
onwards.
schedules. He has not mentioned any schedules or something else like that. Okay, I'll tell you. See, here, first of all, we need to understand, before understanding account groups in SAP, we need to understand a concept, as you said, grouping. Grouping. Okay. What do you mean by grouping? Grouping is nothing but, okay, keeping, or whatever word you can use, keeping similar nature of items or accounts under relevant heads. Under relevant heads is known as grouping. Fine. Keeping similar nature of items or accounts under relevant heads are known as, okay, are known as grouping. It's very, very, very important. So in any ERP, if you want to understand this account group concept, okay, then you need to understand manual accounting grouping, right? So what do you mean by the grouping? Right. And next, before that, we need to understand marshalling. Marshalling. Okay. Order of writing. Order of writing. Order, again, I'm saying here, order of writing. This is very important. Order of writing assets and liabilities. Assets and liabilities. Assets and liabilities in balance sheet is known as, we are not supposed to write whatever we want in the balance sheet. Okay. In balance sheet is known as marshalling. Okay. Is known as marshalling. So account group and grouping and marshalling. So for example, so first of all, to write an order, I need to understand what is grouping here. Now I understood what is grouping. Grouping is nothing but writing similar nature of items or accounts under one particular head. So what are the heads we have in our accounts? Right? What are the heads we have? If you take heads as an, okay, if I take, I'm just taking balance sheet. Okay. And after that, I'll go with the profit and loss account items. Balance sheet. Okay. In balance sheet, we have a heads. Balance sheet, we have heads. Okay. On the liability side, liability is also one head. Okay. And assets are also one head. Assets are also one head. Okay. Under the liabilities, liabilities means, you know that what we are supposed to repay. So under liabilities, we have heads like current liabilities. Okay. And next one, current liabilities, long-term liabilities, long-term liabilities. Next one, fixed liabilities. I'm taking only examples. Okay. Current liabilities, long-term liabilities, fixed liabilities. So, and whereas on the other hand, asset side, we have current assets. Okay. Fixed assets.
Naveen, I have a question here. What is the difference in between long-term liability and fixed liability?
I'll explain that. I'll explain that. Okay. I'll come which each one. What do you mean by current liability? Okay. Fixed assets. Okay. Or you can use anything here. Investments here. Now instead of fixed assets. Investments. Next one, fixed assets. Okay. So here you can see. So what are the items will come under current liabilities or current assets? If I take, what are the items will come under current assets? What are the items will come under investments? And what are the items will come under, what are the accounts will come under fixed assets? So we made a heads. Clear? So this is called grouping, account groups. Okay. When it comes to profit and loss account, when it comes to profit and loss account, when it comes to P&L account, okay, so we have a different expenses. Okay, for example, I'm just taking few as an example. Okay, administrative expenses. Administrative expenses. Okay, financial expenses. Fine, financial expenses. Maintenance expenses. Right? Like that, we have a different groups. Clear? So what are the items will come under administrative expenses? What are the items will come under financial expenses? What are the items will come under maintenance expenses? Same thing on the other hand, we have profit and loss account, revenues also, right? What are the revenues? Like administrative revenues, right? Financial revenues. Like that, we have other incomes. Like that, we have different heads. So here first we will understand the asset side. What do you mean by current assets? What do you mean by current assets and what do you mean by fixed assets?
Current asset means like asset which can be converted into cash within a year.
Within a
And
year in the sense from when to when?
maybe if our financial year is like suppose you brought a machinery today, from today to till next year, so it can be it should be converted into cash.
So at the time
So
of purchase of machinery, will it consider as a current asset or a fixed asset?
that will be a fixed asset because benefit will come after, I mean, like more than a year,
More than?
more than 1 year. I mean, like from a machinery, we can get the benefit from multiple years.
Then how we are saying it's a current asset?
No, I said it's a fixed asset machinery.
Then what do you mean by current asset?
The assets which can be converted into cash, like cash kind of thing, are the current asset which is running
Yeah,
in the day-to-day operations of the
perfect.
business.
I'll tell you here. What do you mean by current asset? First of all, we need to have a knowledge on this. Current assets. So what do you mean by current assets? The assets which can be converted into cash quickly. Any number of times we will repeat this again and again because it's very important. So the assets which can be converted into cash quickly. So here again. So next question. Quickly in the sense, how much time? Okay, how much time? So I'll say 1 year. As you said, 1 year. Very good. Means current assets. The assets which can be converted into cash within a year time. Then that is nothing but current asset. Again, there is a question. 1 year in the sense from when to when. Okay, then the clarity would be quickly cash from preparation of one balance sheet to preparation of another balance sheet. So whatever assets we can convert, okay, from preparation of one balance sheet to another balance sheet, whatever assets we are able to convert, then all those comes under current assets. Understood, everyone?
Yep.
Yes.
Okay, whatever assets we can convert, okay, those assets are considered as an current assets, which again, quickly, we normally use the term called quickly. So next question, immediately they'll ask quickly in the sense, how much time? With minutes, hours, months, years. So then we will say 1 year time. Again, they will raise a concern. 1 year in the sense from when to when? Acquisition or at that, from when to when? Then it's a simple straight answer. The assets which can be converted into cash, okay, from preparation of one balance sheet to another balance sheet, those are nothing but current assets. So what are the current assets? If I say first current asset would be your cash in hand, because already it is in cash liquid form. Okay, cash. Next one, cash at bank. Next one, sundry debtors or anything. Just I'm taking here, anything you can have after cash.
Bills receivable,
Yeah,
will
anything.
come.
Sundry debtors, bills receivables, anything you can take. So I'll take bills receivable here. Bills receivable. Fine. Next one, I'm taking anything, prepaid expenses. Next one, accrued incomes. accrued incomes. Okay. And last but not least, closing stock or inventories. Means closing stock is nothing but why I'm mentioning is in closing stock, the stock which is unsold for the year. Okay. Then these all called current assets. And investments. What do you mean by investments? Investments are nothing but what business has invested in outside securities. Clear? So then that to earn interest, whatever amount business has invested or company has invested in outside securities, okay, then that is considered as an investments. Okay. That is nothing but loans and advances, debentures, loans and advances. Okay. Next one, fixed assets. What do you mean by fixed assets? See, same thing. You know now what do you mean by current asset, right? So here, what do you mean by fixed asset? Fixed assets are nothing but opposite to this. Fixed assets. Fixed assets are nothing but here the assets which cannot be converted. The assets which cannot be converted into cash, which cannot be converted into cash from preparation of one balance sheet to another balance sheet, then those assets are considered as an fixed assets. Understood, everyone? The difference between current asset and fixed asset,
Yes.
right? So for example, see, 1 year I'm saying preparation of one balance sheet to another balance sheet, in the sense it's 1 year time, nothing but 365 or 366 days. So can't we sell, if I'm taking, what is the first fixed asset? What is the first fixed asset in the sense? If I take, okay, building, furniture and fixtures. Okay, building. Okay, next one, building or buildings, whatever you can write, motor van, machinery, whatever I'll say, I'll call it as a machinery. Machinery. Okay, next one, I'll take it as in land. Next, last asset, I'm taking it as in goodwill. Fine, everyone. So these are the fixed assets. So here there are the fixed assets are again divided into two types. One is tangible fixed assets and intangible fixed assets. Tangible fixed assets are nothing but which we can see and we can touch, like your furniture, building, machinery, land. We can see and we can touch it. But intangible fixed assets, goodwill. Only we can hear it, goodwill, nothing but brand, right? But we can't see them. Then that is considered as an intangible. But can't we sell these assets within a year time, 365 or 366 days? If I want to sell a furniture, how many days it will take to sell a furniture? How many days? Yes. If you keep it on OLX, furniture, I want to sell it, how much time it will take roughly?
Within a day itself, it will get
In a
sold.
day, sometimes in a month, roughly, right? Max to max, with some negotiations. Then why it is not considered as a current asset? Why it is why we are treating them as an any asset here? Can't we sell within a year time? That is nothing but from preparation of one balance sheet to another balance sheet. Can't we sell them? Yes, no, maybe.
Yes, we can sell them. But
But
we are considering them fixed asset because we
why?
are
On
using
what
for
basis? See, here only we are making it very clear the assets which can be converted into cash from preparation of one balance sheet to another balance sheet. Okay, these assets also can be converted. Then and here it is clearly mentioning the assets which cannot be converted. Cannot be. Why can't it can be why it cannot be converted? It can be converted, right? Very much it can be converted. Yes or no?
yes.
But again, I'll tell you there is a simple hairline difference here. So at the time of purchase of furniture, for example, at the time of purchase of furniture, so do you say that am I going to sell within 6 months or 8 months, or you will purchase to use long run. Whatever furniture you purchase for your house or your business, right? So you want to use it for a longer period, or within a year you want to sell it.
A longer
For a
period
longer
only.
period.
Longer period. Same thing, building, you purchased your house or your office building. Okay. Then you want to use that for a longer period. At the time of purchase, what is your intention?
Longer period use.
Correct. So here, more than a year time, correct? Longer period in the sense, more than a year. So at the time of purchase, acquisition of these, we will consider that we are going to utilize for a longer period. Correct? Any questions here? So here, whatever furniture I am purchasing. So yesterday I have purchased and I have addressed in my balance sheet, because I'm considering I'm going to utilize it for longer period. Okay. In between, it was unsuitable and we sold it. But still, in the initial balance sheet, are we going to establish this in fixed assets or current assets? Yeah.
Fixed asset.
Correct. So, but if I am considering, okay, what is the difference between good and asset? I think I have already cleared this, but still, how can you differentiate the given one is a good or an asset? Hope you understood goods. What do you mean by goods? How can you make a differentiation? The goods are an asset. How can you make a, as I said that, is it a good purchased furniture? Yes, given. That's it. So what is the difference between goods and asset? It's again hairline difference, which is very, very important to understand this. How we can make a difference between whether the given one is a goods. Furniture is a goods or an asset? Can you tell me?
If my
An
business,
Sorry,
asset.
it's an asset, but on what basis we are saying? It could
if
be
my
goods.
business, if my business is of not furniture, and
Exactly.
then it's a, it's a kind of a asset. It's an asset for me. And
Exactly.
if it is of
Perfect.
furniture, then it's inventory.
If I say goods, okay, the things which are purchased for resale, then it is considered as goods. Correct? The next one, assets. The things which are purchased for business use, not for resale. Not for resale. Then they are considered assets. Understood? What do you mean by good? The things which we purchased for resale purpose. For example, I'm a furniture dealer, as you said. I'm a furniture dealer. My business is furniture business. Okay. My business is furniture business. So here I have purchased furniture. Why I will purchase furniture? 10 tables I have purchased. Yes. Why I will purchase furniture? 10 tables. Quick.
For office use.
For
Office use.
I'm a furniture dealer. I'm saying here. I'm a furniture dealer. My business is buying of furniture and selling of furniture. Understood. I have purchased 10 chairs
To sell.
to sell. Then will it become an asset or a good for me?
Good.
Perfect. So did he mention for office use? Purchased 10 tables for office use? Nothing, right? Purchase, you need to see here what kind of dealer he is. Purchased furniture. For a furniture dealer, what it will become? For furniture dealer, what it will become?
Goods.
Inventory.
Goods. Same time, my business is, okay, electronics business. Bajaj Electronics. Okay. And Bajaj Electronics has purchased 10 tables. Bajaj Electronics has purchased 10 tables. So for Bajaj Electronics, tables is an asset or a good?
Asset.
Why?
Because
Because they
its main business is electronics.
Correct. And same time, Bajaj Electronic purchased TVs.
It's a
Then
good
it's an inventory goods.
It's a goods, right? And furniture dealer purchased TVs.
asset.
Then it's a asset. Yeah.
That's it. Thin line difference. Now you got it, right? You know pretty well, but still I'm reiterating. Okay. So here, as I said that, you know that now assets, goods are nothing but which are purchased for resale, and assets are nothing but which are used for business purpose. So here, now you understood, right? Whatever furniture at the time of purchase. So what is the intention at the time of purchase of furniture? Is it for resale purpose or business use?
For business use.
So all these goodwill, building, whatever it is. So here, so we are making this as a, how you are making it? Building is a fixed asset, machinery is a fixed asset. So we are making into one nature, say similar nature of items under one particular group, right? Furniture, fixed asset, buildings, fixed asset, machinery, fixed asset, land, fixed asset, goodwill, fixed asset. Same thing, investments, loans and advances, right? Dividends, all those stuff we will put under a head called investments. Next one, same thing, cash or cash in hand, cash at bank, debtors, bills receivables, prepaid expenses, accrued incomes, right? Closing stock. So these all are comes under. Yes, cash is the ledger account. Cash at bank is a ledger account. Debtors are same, reconciliation ledger accounts. Bills receivable is a ledger account. Expenses are ledger accounts. Accrued incomes are ledger accounts. Closing stock is ledger account. Correct? So similar nature of ledgers we are grouping under one particular head. Same time here also current liabilities. Okay, current liabilities. What are the current liabilities in the sense? The liabilities which due for payment. Okay, the what do you mean? I'll give a note for this also. Current assets, fixed assets, we know now. Current liabilities. Current liabilities. Current liabilities. What do you mean by current liabilities here? Current liabilities are nothing but, you know that, what do you mean by liability? I need not to explain that, right? The liabilities due for payment. Okay, due for payment falls. Due for payment falls within a year time. Within a year time. Year in the sense? Within a year in the sense? As per accounting, what is
One,
year for us?
one balance sheet to another balance sheet.
Yeah, from preparation of one balance sheet to another balance sheet. Okay, all those liabilities will come under current liabilities. The due for payment which not comes within a year time, that is nothing but the payments which we are not supposed to pay within a 1 year, balance sheet to another balance sheet, then all those considered as in long-term liabilities. Long-term liabilities. If I take current liabilities, first one, whenever you take a first one, your credit card. You have used your credit card, correct? You have used your credit card. Within how many days you need to repay? Normally,
45 days.
bank overdraft is also nothing but 45 days. So first current liability, bank overdraft. Okay, sorry. Bank OD. Bank overdraft. Next one. Next one. After that, you know that sundry creditors. Sundry creditors and debtors, you know that creditors is nothing but our suppliers. So whenever we purchase goods or services are raw material. Okay, goods are nothing but raw material. Goods or services or assets from on credit basis from our creditors. Then at the we have a payment term. We use a term called payment terms, due for payments, right? Payment terms. So what would be the normal general payment terms? Immediate payment terms or 15 days. Normally I'm using 30 days, 45 days, 60 days, 90 days, 120 days, right? 120 days, 180 days. Okay, max to max 260 days. Max to max 260 days. Did you ever saw more than 365 days or 500 days? Anyone?
No.
No, right? Same thing, debtors. We sold goods to our debtors. So we will expect the same. Within a year time, we need to recover that amount from our debtors. Clear? So that is nothing but sundry creditors. One second. Sundry creditors. Okay. And next, bills payable. Bills payable. Same like your bills receivable. Bills payable. Okay. Next one, outstanding income. Outstanding income in this outstanding expenses. Outstanding expenses means this month rent you have not paid. This year salaries you have we have not paid. So we need to pay within a year time. Outstanding salaries. Okay. Same thing. Income, unaccrued incomes. Unaccrued incomes. Unaccrued incomes. Unaccrued incomes is nothing but we have not given services, but we have taken advance salary. Okay. So these are nothing but unaccrued incomes. Next one, long-term liabilities. Long-term liabilities are nothing but you have taken loan from banks. Loan from institutions. So these are more than a year we will take normally. Okay. Next one, fixed liability. Okay. Next one, fixed liability. Okay. Fixed liability. So what do you mean by fixed liability? So after repayment of all, whom we need to repay back? Company, as a company. Whom we need to repay back?
Suppliers.
Shareholders.
Supplier already came, right? Sandy creditors. We are the business.
Shareholders.
We are the business. We are not the owners. So at the end, to whom we need to repay back? As a business.
Shareholders.
The
Shareholders
business.
are nothing but owners, right?
Yes.
Yeah. So that is nothing but capital, share capital, whatever you call. So here we are going to. So what do you understood? What do you mean by fixed capital? Capital is nothing but after payment. See, again, I'll tell you the difference. So after payment, okay, the fixed liability is nothing but your shareholders or individual proprietor. If you say that owner's capital, owner's investment. Understood, everyone? So we have here what I would like to make the understanding is account group. What are the account groups we have here? What are the account groups? Current example I have given: current liabilities, current assets, long-term liabilities, investments, fixed liabilities, fixed assets. Correct? And then the same thing here also: administrative expenses, financial expenses, right? Other incomes, like that. These all are called what? Groups. So here my question was how you will identify the given balance sheet. So now tell me, this balance sheet is a company balance sheet or other than company balance sheet?
A company balance sheet.
How can you say that?
Because of the groups and all, like the
Not in
heads
any
and-
balance sheet you will have the groups. I'll tell you. See, the preparation of balance sheet will be in two methods. Okay. Before that, again, the people, a layman, see, majority we have completed our graduations and all, but still majority people doesn't know how many ways the balance sheets can be prepared. Whenever I ask the people, they will say that horizontal and vertical. That is not that is a format that we are showing it. But here, how many methods we can prepare a balance sheet? In the sense, methods in preparation of balance sheet. Okay, there are two methods. One is order of, now you know what do you mean by marshalling, right? What do you mean by marshalling? What do you mean by marshalling? Did we discussed? Grouping similar nature, marshalling. Marshalling is nothing but order of writing assets and liabilities or in P&L account in balance sheet is no how what is the order we are following. So there are two types of orders. I can come here only. There are two types of orders. Many types of orders we have. So in balance sheet, the assets and liabilities, how many types we can write it? There are two types of orders. There are two types of orders. Okay. First one, order of liquidity. Next one, order of permanence. Understood? Order of liquidity, order of permanence. So what do you mean by order of liquidity? Order of liquidity. So there is no any other method. We need to follow the same thing. Order of liquidity. What do you mean by an order of liquidity? Okay. Very simple this. Order of liquidity is nothing but the most on the asset side. On the asset side, the most liquid asset. The most liquid asset will be shown first. And the least liquid asset. And the least liquid asset will be shown last. Will be shown last. What is the most liquid asset? What is the most liquid asset?
Yes.
Cash.
Cash in hand. And the least liquid is goodwill. Or any patents, trademarks, or anything. Correct? But when it comes to liability side, on liability side, the most urgent payment will be shown first. Okay. And what is the most urgent payment? What is the most urgent payment we need to do? Repay. As per our example.
Something to supplier. We
No,
need
no.
to
What is the most urgent payment?
overdraft.
Bank overdraft
Shareholder.
or credit card. Normal, every firm and everyone individual will prepare have a credit card, right? Business card or something else. Okay, that's nothing but bank overdraft. Okay, and the least liquid asset. And the least liquid asset. Sorry, the least urgent payment. The least urgent payment will be shown last. It is fixed liability. Understood, everyone? Fixed liability is nothing but, so what we will do, most urgent payment in the sense, so first we will pay all liabilities and at the end, whatever amount is there, that we will distribute to our owner, nothing but investor. Yes or no? So on other hand, order of permanence, it is opposite to this. What would be the order of permanence on the asset side? Yeah. What would be the order of permanence?
Liquid assets should be shown
Last and
and
most liquid asset will be shown last and the least liquid asset will be shown first. So what would be the heading? Okay. So here, what I mean that this is opposite, right? So most liquid asset will be shown first, last. That is nothing but how the order would be. First a fixed asset. Under that, first asset will be shown goodwill, anything order will be, and last would be furniture. Last would be furniture. Okay. Where in permanence method, and investments as it is, and under current asset. Under current asset, first item would be closing stock and last item would be cash. The order will be extremely opposite. And when it comes to liability side, the least urgent payment will be shown first and the most urgent payment will be shown last. Understood, everyone? The order would be completely reversed. Yes, no?
Yes.
Yeah. So, but what is the advantage? In the sense, now you know that how many orders we can prepare, the balance sheet. How many orders we can prepare? So is it order of liquidity or order of permanence? Whatever balance sheet we have prepared.
This is liquidity.
It's a liquidity. Now you know how to prepare permanence also, if I'm not wrong.
Yes, we just
It
need
would
to
be
reverse it.
correct. So here, then who will prepare order of liquidity? Order of liquidity in the sense, other than companies, all will prepare their balance sheet in liquidity order, and companies will prepare their balance sheet in order of permanence. Now understood? Apart from companies, individual, partnership, even bank will have a schedule, but at the time of submission, their final reports, they won't submit their balance sheet with the schedules. They will submit normal in order of liquidity only. Now understood. So what kind of balance sheet? Is this a company balance sheet or non-company balance sheet?
Non-company.
As I said that. So first of all, as an accountant, we need to check whether what format it is, even though there is no heading, nothing, but we need to check there is a 100% we need to follow this order only. Normally in academics, our faculty won't teach that what format we need to follow. They will say that whatever there in trial balance, we need to take it out accordingly, same as it is, but which is incorrect. So we need to follow according to that. If you are preparing a balance sheet for company, then you need to follow permanence order. If you are doing an individual proprietor balance sheet, then you need to do what we call liquidity order. Is that clear, everyone? Any questions?
Yes.
Okay, so this is about your, as we discussed, chart of accounts. So this is account group. Why the account group? What we are going to do, we are going to create similar nature of groups first. Okay, first we will create these nature of groups: current assets, current liabilities, long-term liabilities, sundry debtors, okay, fixed liabilities, fixed assets, okay, like that, cash and bank. Those nature of account groups we will create, and under account groups we will create the ledgers. Okay, so for example, purchased furniture for office use. So what are the accounts we need to create here? What are the accounts we need to create? Purchased
Furniture,
and
furniture and cash.
furniture and cash. So furniture will come under which group? Which account group?
Fixed asset.
Fixed assets. Correct? Under fixed assets. And same time cash,
Current assets.
current assets. Under current assets, we are going to create one more group called cash and bank. Understood? Because if I take individual banks, for example, I'm in business, individual, we will maintain 1 or 2 bank accounts. But as a business, probably we will maintain 3, 4, 5 banks. Correct? So we will create cash and bank. Same time, purchased goods on credit from ABC. Purchased goods from ABC on credit. So what are the accounts we have in this?
Purchase and the creditor.
Purchase and
Creditor account, ABC account.
creditor ABC. ABC will come under what? Which accounting group?
Sundry creditor.
Sundry
liability.
creditors. So in SAP now, earlier we used to use sundry debtors and sundry creditors, but now we are no more using the term called sundry debtors and sundry creditors in SAP. We are calling them as a trade payables. Trade payables or trade receivables. Okay, so ABC we are going to group under sundry creditors, correct? And how about purchases? Purchases?
It's
an expense. Goods, nothing but an expense. What do you mean by an expense? What is the difference between expense and loss? What is the difference between expense and loss?
Expense means like the amount which we spend to buy any product or.
How can you say that it's an expense? So this particular quotes, whatever amount you are paying, is it an expense or loss?
Not loss.
Loss?
No.
Sir,
It's an
Not
expense.
how can you say that it's an expense? See, I'll give you in simple terminology. So what do you mean by an expense in the sense? Something, okay, which we are spending, if we get return benefit from that, then it is considered as expense. Fine. Same thing. The amount, simple. Okay, the amount which we spent, and we are not getting any return benefit, then it is called loss. Called as loss. Understood. So for example, you paid a fee for this particular course. So is it an expense or a loss? Now tell me.
It's an
Expense.
expense.
Expense. If you get some knowledge or something else, then it is considered as an expense. If you're not getting any knowledge, just you paid it and you are attending it, but you are not getting anything. Whatever I'm explaining, you're not able to understand anything out of this. So then it is considered as an
Loss.
loss, absolutely loss. For example, you took a building rent, okay, and you paid a rent also, but you are not staying in that particular building. You're not staying in that particular building. Then what it is?
That's a lost.
Loss. If you're staying in that building,
Expensive.
same thing. Purchases. Why we purchase the goods?
To
Why
get some benefits out
by
of that.
selling it, right?
Yeah.
Right. So that's the reason purchase is considered as an expense. Sales are considered as a revenue. So purchases will come under what kind of expenses? That could be anything. It's a financial expense, not financial, admin expenses or indirect expenses. Understood, everyone? Expense loss, even though this is not relevant to our SAP, but still, because we need to have a knowledge, because whenever we go to this particular client place, so they know pretty well about this, but they will try to pull our legs. Why can't we change the this one method or order? Clear? As you said, 1951 Companies Act, it's clearly mentioned in Companies Act 1951. stating that, sorry, 56 Companies Act, it's clearly mentioned that every company has to follow their balance sheet need to be presented in order of permanency method. Okay, and other than that, companies, everyone will follow their balance sheet as a liquidity as per legal requirement. And you are not following any other format out of these two, then your balance sheet is not considered as a balance sheet, even though you are showing assets and liabilities. Yeah. Any questions? Any questions? So here, as I
No,
said,
it's clear.
yeah, we know what do you mean by chart of accounts, because account groups, we will create a similar nature of items and we will assign to chart of accounts, and under account groups, we will create the GL accounts. In the intermediate, we have done, right, classification first we will do, and after that we will identify what are the accounts involved in that. Okay, just know whatever we did, purchased goods on credit from XYZ. XYZ is a sundry creditor. So we are going to first ledger is XYZ, and we are going to assign in a group called sundry creditors, nothing but trade payables now. And trade payables will come under a chart of account called, what is the chart of account we have created? LOCA. We are going to create LOCA. Clear, everyone? Any questions? Any questions?
Nothing from my end.
No question.
How about others? So we know now what do you mean by chart of accounts, account groups, okay. Operational chart of accounts, group chart of accounts, and country specific chart of accounts. And you know what is 1:n methodology and 1:1 methodology, if I'm not wrong. Very, very, very important. In company code global parameters, first step is chart of accounts, and everywhere people will confuse. So 1 lakh series is for liabilities, 2 lakh series for assets, 3 lakh series for incomes, 4 lakh series for expense. People have that. I'll explain that in our next sessions.
Naveen,
Yeah, please.
Naveen, I'm still a bit of confused with the country specific chart of account. Can you
Country,
give an example? Give an example, like
this is not country specific. Country specific in the sense, for example, I'm having 3 company codes, for example. One is LI01, okay. Another one is LI02, another one is LU01. Fine. This company, I don't have a corporate company now. Okay. So here my company is in India, first company. Okay. And second company is in Australia. Company code is in Australia. And this is in US. Or you can say Canada. Fine.
okay.
3 company codes I'm having, company or company codes, whatever you call, company codes we are having, okay, LI01, LI02, and LU01, right? Here, all 3 are different countries, and we don't have a common company here. Okay, then what I need to do here, I need to have each country specific chart of accounts. For example, I'll create it as an LICA. Okay, Lahari India chart of accounts, operational chart of accounts. Next one, LACA, Lahari Australian chart of accounts. Next one, LCCA, Lahari Canada chart of accounts. So I need to follow for Indian company code, I need to follow completely Indian financial year. Australia, Australian financial year. Canada, Canada financial year.
Okay.
Okay. And again, if I
Yeah.
want any consolidation report as per chart of account level, then we can have one group chart of accounts as LOCA. Okay, so I can combine this. I can get consolidated report, but it's useless again.
Okay.
Clear?
Yes.
Yeah. Any
And
other?
for this and for these individual company codes, I have to maintain this so-called this country specific, right? The tax
Correct.
reporting and on those.
Correct, exactly. Because they are not
Okay.
following common fiscal year,
Yes.
correct? common controlling area, they are not able to follow. I'll tell you that in future sessions.
Okay.
Any other questions? So that's the reason that the SAP made these two as an optional. What is country and group chart of accounts? Okay, 99% companies will follow 1:n methodology when they are having member company codes, different member company codes. Because SAP has provided earlier in the classic GL accounting, we don't have this reporting formats. Now we can have any country's reporting format we can have. I just know I told you, right? We can have local GAAP reporting, we can have IFRS reporting, we can have US GAAP reporting. And we are going to discuss in depth of those reportings. Fine? Yes, no.
Yes. That's fine.
Any other questions from anyone? I'll share these 2 days recordings today. Okay, and once go through before next coming class, and I'll share the material also, share the material, whatever till now, whatever we did. Okay, whatever this one Lahari constructions and Excel also I'll share in the group, whatever Excel, this Excel part I'll share. Okay, next. Any other questions from your end?
Nothing as such, like about that SAP installation part.
Yes.
Maybe whenever you are free or you have time.
Tomorrow first, or like once you come back from office, at
Okay.
what time you'll come back?
I'll be back at 4.
You just try to text me after 4.
Okay.
Okay, just give me a 5 to 10 minutes time with screen sharing. Same with
Okay.
the Zoom link, we can do it. Okay,
Okay.
that's
Okay,
it.
sure.
Yeah. Others also the same thing. And Abhinay, right? Sorry. And others also, I'll provide your user IDs and passwords by tomorrow first hour. So I'll give you this one also, link how to download and all those videos also. If still you face challenges, then let me know so that I'll log in and I'll create the user IDs and password in your system through Zoom ID.
Okay. So you will be providing Navin the user ID by tomorrow, right?
Exactly.
Okay. So,
Okay. Thank you all.
okay.
Thank you.
Thank you.
Thank you.
Right.
Thank you.